what is your available universe? In other words, what are you actually able to invest in? And perhaps on this, I can turn to you, Roger. Could you talk a little bit about where you allocate funds globally, geographically?
Yeah, sure. So similar to Xavier, we run a lot of money for pension funds. We're investing, trying to protect the real wealth and increase the real wealth of our clients, which is the pension funds. At Newton, we have a global approach. I'm the global telecoms analyst. And my remit is to pick the best telcos from around the world. There are hundreds of telcos around the world, and we can pick and choose where we think the best opportunities are, which means, you know, we can totally void regions if we don't think the returns are good. I guess relevant to the telco sector, it's very much things like what is the regulatory outlook for a region. So we can very much pick and choose, and if we don't like an area or the outlook for companies, we won't invest in them.
Right. And Henrik, perhaps you can perhaps talk a little bit about what it is that you are looking for when you screen investments. You know, what makes something investable? What makes you inclined to say, well, I'll come back and look at that in a few years' time?
Yeah, so at Schroders we have numerous different strategies and funds to cater for various institutions' needs. So we have growth funds investing in growth companies, we have value funds, and we have dividend funds. But if I look across the board, it's fair to say that if we look at growth, has not been a great deal of that in European telecoms over the past years. So our investments in the growth funds, if we want to allocate it to Europe, has been pretty much investing in pretty much your enemy, the cable guys or the unbundlers that you guys would say are eating your lunch for free. When it comes to dividends, dividend funds, there's a lot of new telcos that do return a lot of cash to shareholders, but there's also a lot of pressure, and whether those dividends are covered or not is a big question mark. And to some extent, when I assess the industry is, I don't want to wake up one morning and see that 10 or 15% of the value has been taken away by a decision from someone who I don't understand their policies, haven't been clear or consistent in their message, which means that Europe is more difficult to invest in than other regions.
Right. Well, I guess that's a good springboard to move on to the question of how you perceive the current European telecoms landscape, and indeed whether the regulation that's present in Europe encourages you to invest here or indeed outside of Europe. So I suppose the first question, how would you summarize the regulatory conditions in Europe? Favourable to investment or hostile? Perhaps Roger, why don't you start on that one?
So, I mean, maybe just to take a step back, the state of the European telecoms industry, I mean, not to be too downbeat, it's awful. It's absolutely awful. So, I mean, last year, you talk about it, it was a telecoms crunch. You've got telecoms companies cutting their dividends, rights issues, and I just to put it in context, we've had revenues declining in this industry for the last 5 or 6 years. Henrik saying, there's no growth in the traditional telcos. So, to put a slightly more positive spin on it, there is end consumer demand, which is great. That's what an industry needs. Consumers love the internet. They love mobile. They love mobile and internet. Their demand is pretty much insatiable. So take that as a real positive. We've got an industry with great demand. So that's something I think we need to remember at the background. And on the regulatory side, whilst the telco industry I think is in a pretty awful state, there are some brighter, more encouraging signs coming out. Last year, I think was hopefully the signs of a sort of decade change in European telcos. And there are signs of, there's been a lot of talk today about everybody seems to want investment, which is great, and people are at least talking about that. And I think the different parties, I think, have stood at different ends of the room before, and I think there's a bit more conversation going on. I think the consumer wants investment. They want better services. I think the telcos want the ability to invest and get a return. We want the telcos to invest and get a return. And the regulators and the European Commission say they want investment. So.
And just following up on that, given your experience as a global investor, would you care to compare the region with other geographies?
Yeah, sure. I mean, I guess I've been covering the sector for about 14 years, and the US has been brought up a number of times. But, early 2000s, Verizon and AT&T were in exactly the same place. They had something called UniP, which was basically the same as local loop unbundling. The telcos were losing lines hand over foot. Their revenues were in decline. And at that point, again, there was a crunch point in the US telcos, and the CEOs, and I think potentially fortuitously, there were a lot fewer players, so perhaps it was easier to get their voice across. But they said, look, if you carry on with this regulation, there's two things. We won't invest and we'll cut jobs. If that's what you want, so be it. Interestingly, sort of months later, the UniP was fully retracted. What happened? Fibre investment. Look what's happened, in the US versus Europe. There's been investment and growth. So there is a precedent there.
Right, and Xavier, I think you're, like me, also a fellow life sentence to telecoms, no parole type of individual. I mean, how do you see the European landscape at the moment in terms of regulation?
It's been mentioned a number of times before, but what strikes me is how much focus there has been on price deflation, and price deflation only, as opposed to the sort of utility that one gets out of better networks, better services. So that seems to be the focus so far. Some other issues that come to mind are the lack of consistency across countries, which makes it very difficult as a pan-European investor to actually find your way through the different sort of regimes. And lack of predictability as well, because as mentioned earlier, when you're dealing with 28 government agencies, whether it's competition or telco regulation, sort of involved in shaping the sector, it's very hard to actually predict outcomes and based investment decision for the next 3 to 5 years. And finally, broadly, not particularly investment friendly. And if, in terms of sort of survival and trying to keep my job, if in the last 10 years all I've been doing is invest in the so-called incumbents, I would have probably lost my job by then, because the place to be to actually make the most money for the ultimate investors would have been sort of operators sort of free riding or sort of renting or the ones taking less risk in a way, and whose fate has actually been much more positive than that of the people providing the network and investing in it.
So in other words, the arbitrageurs, those who resell infrastructure rather than those who actually dig up streets and put up base stations.
I mean, the ones who were needed when you start from monopoly positions. Clearly, when you start with a monopoly who's got 100% market share, there's no other way but to unbundle and open the network to create that competition. But then when you sort of start having a second or third, I mean, mobile is a good example. When you have enough of these guys competing, there's no point imposing onerous access requirements when the market seems to be sort of broadly working, based on pricing coming down 10% plus every year for the last 10 years.
Right. Well, I think and that's something that we may sort of cover again and come back to later on the topic of consolidation and some of the remedies that are imposed. But I'm going to stay for the moment with the fixed line side of the coin. And Henrik, perhaps I can ask you how you see the fibre investment issue in Europe. I mean, as we just heard from Roger, the US has moved ahead on this rather more aggressively, so have many other geographies. In Europe, there's a perception that we've been lagging. As I think many of you know, I am a big fan of the non-discrimination and cost methodology recommendation that I think can help address that issue. But why do you think fibre deployment in Europe has been so slow, and what might change to improve that?
I think there's a number of issues. Firstly, the size of the investments required, and based on where some of these telecom operators have come from with their balance sheets, it's obviously a very big task to start investing billions in new technology. Secondly, when it comes to new technology, obviously we have seen copper developing with vectoring and now GFAST coming. So is there a way where you sort of can find a cheaper way of achieving the same means without taking too high risks? Then I think there was, to be fair, relatively slow demand. Do you actually need 100 meg today at home? And therefore, you could, in particularly, sit back and potentially wait. But the reason why, there has been this hesitation and delays is in reality that, there's ambiguity on the regulatory side. If you do invest and you push forward and, they come to the day when you're just about to reach your payback period, the regulators come and pull the rug under your feet, which they have done historically. It's very, very difficult to justify, and it's difficult, I believe, for the chief executives that we see on a regular basis to sit in front of me and tell me that they're going to spend, in principle, my money on investing with no certainty on returns. And for me, I will only invest if I have a certainty on the return that I will make.
Right. So, I mean, that perhaps prompts us to investigate what actually you do ask when a CEO comes in to see you and explains that they are deploying the pensioners' capital, the pensioners that you represent, in their bright new shiny fibre optic network, or for that matter, their LTE network. I mean, what kind of questions are you asking, and where are the answers, if you will, most problematical? Xavier, do you want to start on that one?
Yeah, I mean, the obvious question that one asks is the cost of running it out, the revenue upside from doing it, the payback period, which for fibre tends to be very long. And effectively, we're talking about replacing a 100-year-old copper network with fibre for the next sort of decade. And finally, and most importantly, is the extent to which there's a risk, as Henrik mentioned, of some sort of clawback coming post the build. Because if you're a cynical sort of stakeholder and you find someone willing to build, you may create incentive that look half decent in the short term. And once the network is built, that had you, as an investor, have some sort of guarantee that the build is not going to be sort of resold very cheaply to third parties who haven't contributed. And I look at other sectors, including concessions. One of the things I find interesting in some of the concession agreements that I see is the fact it's a private law contract which protects sort of the commitment of the concession holder as an investor over multiple years. And that sort of takes away the political cycle and the risk that comes from change in regulation. And I suppose that there must be sort of ways of ensuring that the tens of billions that go into the ground with paybacks of 10 plus years have some sort of guarantees that are contractually binding, which would allow us investors to go in with sort of more conviction than we're currently doing.
Right, and Roger, in a sense, the same question, but when operators come into you with these projects, I mean, how are you able to sleep at night, as it were, knowing that once the capital is being committed, that an attractive risk-reward return will be permitted? I mean, it's a oft-mentioned point, but telecoms infrastructure doesn't have legs and isn't biodegradable. Once it's in the ground, investors obviously inevitably must worry about it being subject to surprises that they hadn't anticipated when they originally okayed the plans.
Mm-hmm. I mean, my biggest worry, as Xavier said, is the regulation. I mean, we will obviously ask on the returns, and the company has done their numbers, and we can sort of cross-check that. We've seen from the cable industry that the consumer likes fast speed, and actually they're willing to pay for it. I mean, a lot of the, in both the US, Europe, Asia as well, we are seeing market share being won by cable providers because they offer faster broadband speeds. And they're not necessarily the cheapest, they normally aren't the cheapest. So again, from that side, I gain a lot of comfort. I think there's a natural demand there, which is great. And then it comes, as Xavier said, on the return. The biggest risk for us is definitely regulation.
Right.
And I suppose on Roger's point about cable, what's interesting about cable is you've got a network, you charge for it, and you're not being regulated. Whilst as an incumbent, if you put in the fibre to compete, you end up being regulated when your main competitor isn't, effectively.
Yes, I mean, I think that also raises another very important point, which is, the difference between, if you will, thinking about things in terms of bills and thinking about things in terms of my preference is very much for unit prices. I mean, I think we often here in Europe pat ourselves on the back far too much, thinking that we have low prices. And certainly my own research indicates that on many yardsticks, we're a more expensive market than the United States. We have lower bills. That's not the same thing as low prices. I mean, if we compare, for instance, grocery stores, and I come out of my grocery store with a basket, and you come out of your grocery store with 3 trolleys, and I tell you that my grocery store is cheaper because I paid less at the till, then I think the technical word for me is a moron. But one sees that conflation all the time. People writing about Europe as cheap because it has low ARPUs. Well, I mean, certainly, a lot of research we've been doing is demonstrating if we actually want cheap services, we need revenue growth, because by far and away the best driver of lower unit prices is investment, and by far and away the best driver of investment, of course, is revenue growth. But all this brings me neatly on actually to the topic that study actually referred to, which is the state of the mobile industry, which I suppose some might say is in even more difficulty than some of the components of the fixed line market. Henrik, your thoughts on the current state of European mobile?
Yeah, to quote Roger before, it's awful. So I think we are at a stage where we at starting last year in principle. We got a bit encouraged by the fact that we saw intra-market consolidation, which in principle, as things currently stand, is in principle the only way to get market repairs to improve the return profile and to stimulate further investments. I think what we otherwise are risking is seeing, perhaps in a more extreme sense than in the US, a two-tiered market where you have, the 2 leading operators being able to invest, and you have 2 smaller operators that are being, very aggressive. That could potentially work in the US. It certainly has, but it will take a long time in Europe before we are there, because we are behind on 4G, and 4G will be the key to unlocking that value and to return to growth and be able to justify charging a higher price for the better quality and for more capacity that you require. And
I mean, Roger, you were pretty clear about the state of telecoms in general. I mean, your thoughts on where mobile stands at the moment?
Yeah, look, I think I hope it was the trough last year. I mean, again, just to put in context, I don't know if everyone appreciates, but I mean, this industry has been declining sort of mid to high single-digit top line for the last 5 years. I mean, it's been under huge pressure, so something had to be done. And I've taken positively. I think Ms. Cruz has done a great job of trying to get the parties together. And talk about investment and and there's a trust element between the regulators and the operators. There is. The operators, I think, want to invest, but the regulators and the Commission want them to invest. But on the downside, the operators obviously are nervous because they keep getting attacked on the regulatory side. There were some positive steps on consolidation, but there's also been a bit of a pullback. So, undoubtedly going from 4 to 3 is a positive for the industry, but then taking it away with remedies is a bit sour. We, obviously prefer that wasn't there. And 3 competitors is still potentially pretty competitive. And I think, as we look in the industry, it's not about even putting prices up. If prices were just stable, if we could get stable prices, the outlook for this industry could totally change. Because as I said, looking on the positive, there is an insatiable demand for data. It's really exciting. What these new networks that 4G can do in terms of speed and latency, allowing video on mobile, it's exciting. It's really exciting. And the consumer will benefit from these extra services. That's before you move on to other industries. We've talked about e-health, etc. So, and the other side I would put, and I think the operators are doing well, they are starting to invest, which is great. We've had some really positive announcements from the operators, Vodafone, Telia, a number of these operators who are putting money into the market to invest and differentiate themselves on services, which I take as a real positive.
Right, and I guess that also, seen as you raised the topic, takes us on to the consolidation aspect to all of this. I mean, Xavier, perhaps I can ask you, your thoughts on the types of remedy that seem to be applied when we see 4-to-3 consolidation, and what message that gives to you, as an investor.
I mean, back to the point about how you deal with a monopoly, imposing access to a third party to create competition out of nowhere. I think when you start with a sector with multiple players and a very competitive pricing, you have to think about it differently. And the issue with allowing consolidation and keeping the principle of forced access to the merged network, without any of us having the details behind the agreement that's out there, that's been signed off by the authorities, it makes it very difficult for us to predict the ability of that sort of reseller to further damage the market or not. So if I look at the German market as an example, it's quasi-impossible for me to predict returns for that market in the absence of good understanding of what the player who enjoy the remedy benefits will be doing. So in terms of uncertainty, as far as I'm concerned, I find the mobile sector still pretty uncertain, and I would add to this particular issue a number of sort of more long-term structural issues, which I'm particularly worried about, which are the spectrum renewal costs. So we have operators investing billions of euros on the back of a frequency that they are authorized to use for some years. What happens when the renewal takes place? Will they be taxed again? And if so, by whom match, using what rules? Then the issue of publicly funded Wi-Fi, municipal networks, for example, which are free alternatives to commercially funded network. How do you deal with this in terms of long-term returns that I can sort of model forward? And thirdly, I think roaming, although very exciting for all of us as consumers, I think there are some pretty serious risks that if it's implemented poorly and not well monitored, you end up with major unintended consequences. So lots of uncertainties as far as I'm concerned in terms of predicting the outlook.
Right, and I maybe add to that ring fencing of spectrum,
yes,
which
so,
seems
absolutely.
Another potential distortion that is very hard to predict. So that then in turn takes us on to the broader pan-European question. I mean, Henrik, perhaps I can ask you your thoughts on the telecom single market kind of concept. How important is this, and what steps such as spectrum issuance reform are required to make a reality of a digital single market?
I think Roger touched upon it before. It's very, very difficult, looking across the European markets today to really get through, the different rules and regulations, which means that the single market is clearly very helpful. It gives us at least some clarity. The question is, will it be consistently applied over a long period of time, which is something I guess we can worry about as and when it's actually been implemented. But it's clearly encouraging that we have more clarity on issues, such as spectrum. Is Is it, a longer-term license than what is typically the case today? Will it be issued at the same time? Because clearly when I value companies, the spectrum liability that in principle Xavier referred to, that takes away a lot of the value for the future. So having that clarity is very, very important. And I think what so far has been achieved on fiber as well in terms of investing in the and so forth is very encouraging. But they need to go the next step, which in principle is to solve the unbundling. So we have heard a lot of nice words and the nice policies, but we need to see action now, and we also need to make sure that it's not watered down as soon as we get the individual countries and politicians involved in setting the details.
Right, so that is actually raises another very contentious topic, which we perhaps haven't got time for today, which is the interaction between Brussels level regulation and the local national level of regulation. But there is, in fact, an even more controversial topic. Apparently we have paramedics to hand, so I can now raise the issue of net neutrality. We've only a couple of minutes, but it's a hugely complicated topic. Xavier, just very quickly, a few thoughts on that one?
A hugely complex topic, but the bottom line for me is if you're using a motorway and you are responsible for half the traffic, you tend to pay for that traffic, whether it is the service provider generating that traffic or whether it is the end user enjoying the result of that traffic. One way or the other, the motorway operator needs to be compensated for the use of the motorway, is my simple way of putting it.
Right, yeah. And Roger, we've discussed this many times over the years, but are there any sort of simple solutions to the conundrums here? Philosophically, I suppose one could ask, is it really the job of regulation to dictate industry structure, which seems to be almost implicit in the net neutrality enterprise?
My comment there would just be less interference. I think net neutrality, why are we interfering? As Xavier says, if you're building the motorway, you should have control of it. People can use it and you need to let people use it. But if you want to set up a toll road and it doesn't affect the other lanes in the motorway and people are willing to pay for it, of course you should be able to charge for things like that. So I think everybody's getting involved in a debate that they really shouldn't be getting involved in. I think it's between the users and the provider where this debate should be. And I don't understand why telecoms is so different in that respect. We don't pile into every other industry on what you are and allowed to do with your own assets. So why are we piling into the telco sector? Right,
okay, so final question. I guess I sometimes give the impression that the only issues facing the telecoms industry are regulatory in nature, but I am told there are other matters of concern as well. So, just very briefly, perhaps Xavier, I'll end with you where I started. What else needs to be addressed other than the regulatory context?
There's a very interesting comment from someone I met last week who's an investor in the sector and a long-time investor. Who said to me, the issue is sort of plain vanilla telecom companies is if we buy them, we can't find good management to run them. And the reason we can't find good management to run them is who is attracted with a dying industry, was sort of his caricature of the sector. And I hadn't thought about it, but in a way, yes. The clever guys joined Google, Apple, and have made a lot more money being in these firms the last 10 years than working for incumbents. So fair enough, but that's an issue that's then creeps up as lack of talents maybe, because you struggle to attract and retain them.
In an industry that isn't growing and hasn't grown
correct.
in a long while.
And you don't dare say you work for any one of these, I suppose.
Well, I'm afraid that the monitor here tells me that our time is up. Can I thank you very much in the audience for having the patience to listen to us, and thank you very much to the panel for giving it all your insights.